Uber's first quarter results demonstrated strength as its trips rose 24% across its offerings, which helped boost mobility revenue 40% in the quarter. But what does that suggest about the state of its riders and the broader consumer? Yahoo Finance's Dan Howley has the latest, so Dan, break it down for us.
That's right, Rochelle. Let's just go over the numbers real quick for Uber, which squeaked by analysts' expectations for Q1. We had revenue at $8.8 billion. That beat the expectation of $8.7 billion. An adjusted loss per share we had at 8 cents. That met expectations of 8 cents. But the broader picture is, as you alluded to, that the consumer strength. And so that leads us to the bookings. Bookings is basically how many, the amount that Uber earned through bookings on delivery and mobility. So gross bookings came in at $31.4 billion. That met expectations. We had mobility bookings. That's being driven around by an Uber. That came in at $14.9 billion. $14.8 billion was what was expected, and that's up 40% year over year. As far as overall gross bookings go, delivery we had $15 billion. That's a beat on $14.9 billion. That's up 8%, and then trips were up 24% this year. I think one of the things that's worth noting, though, is how much the market is reacting to this. We had in pre-market action, Uber was up 7% on the news, and you could see that this is something where the consumer obviously not falling apart as much as was potentially feared, and the mobility picture really coming back. During the COVID years, the company was living and dying by its delivery service, which at that point they had referred to as the Eat service, and so that's continued to expand while mobility has really come back. So the company's really firing on basically two fronts and doing a really good job of it. I think one of the things that's also worth pointing out, though, is the potential, and I say potential, for increased competition from the likes of Lyft. Obviously, we had Lyft's new CEO on with Brian Sazi, and they were discussing how Lyft wants to become more competitive with Uber. That could mean price cuts on Lyft to make it more competitive with Uber. But as I said, Uber has the drive mobility part, the delivery part, and then the freight part. So they have a number of different avenues to bring in revenue, whereas Lyft is really limited as far as that goes. So I don't expect them to overtake Uber. I don't think anybody really does. But, maybe when the next time you decide to get into a cab, you'll look at Lyft and Uber again.
I'm one of these people who, once I sort of have something I like, that's kind of my go-to, and I don't even double check. And I think that a lot of people do have that, but we know that during COVID, people were doing a lot more price comparison. What about the international market? Because I know that was also a bright spot for Uber here.
Yeah, obviously they're trying to continue to expand the international market. They are large there. And so that's something that's going to continue to be a benefit for them. Again, comparing between that and Lyft, I mean, Lyft just doesn't have that, right? Uber is an international organization, whether they're operating as they do in the U.S., where riders are contracted to them, or they're working with taxi services. They also are adding or working to add all New York City taxis to Uber, so this way you can call a regular cab rather than having to hail it on the street. I mean, you can still get that classic New York experience if you want. Go out and stand on the street and raise your hand. But if you'd rather not do that and you'd rather call from your phone, you can do that as well. So, yeah, continued improvement for the international market there, though.